Hi, and welcome to Home Buying Made Simple. I'm Lisa Williams, broker and owner of Williams and Associates Realty. Today, I'm meeting with Maria Perez-Hernandez, Community Loan Officer with Johnson Financial Group. Good morning, Maria.
Good morning, Lisa.
Good
Thank you.
morning, and welcome. Johnson Financial Group. They are statewide institution, correct?
Yes, Johnson Financial Group is based out of the state of Wisconsin with a corporate in Racine.
Okay.
We have a second corporate at downtown Milwaukee. And Johnson began about 55 years ago and is now the largest family owned financial services company in Wisconsin.
Wow, I did not know that.
Mm-hmm.
And one of the new things here, probably about a year and a half ago, we're actually at one of your new locations, correct?
Yes, one of the newer locations. There is two more that are a little younger than ours because they were all kind of being built at the same time. But yes, we're very proud. We have a mortgage team here in Wisconsin, here in Milwaukee, that actually we started off just a block away from where we are now. And it was only a mortgage production office. And thanks to the work that our team did working with our community first-time buyers, the bank decided to establish the branch for us. So they built it from the ground, and we're very proud to say that. And yeah, we've been here since May of 24.
Okay, and we're saying here, so where's the location?
Here is 4219 West National Avenue in West Milwaukee. So we are just a bit east from Miller Parkway.
Miller Parkway, yes. So you do mortgage lending. Can you tell me what type of mortgage products you offer?
So we offer several different types of programs for first-time buyers. Also for non-first-time buyers, we have a lot of different, programs, a wide range, of loan programs for different markets. But my focus is community lending, working with first-time home buyers. And we have all of our programs are conventional programs, whether they are through Freddie Mac, Fannie Mae, or through WIDA. We have different options, within those loan programs. They're all fixed rate programs. We also have some portfolio, which are also fixed rate. We also offer adjustable rate programs, but for our community, is not very common to use.
To use the adjustable rate mortgages. So there are some fixed rate mortgages and also some adjustable rate mortgages,
Yes.
but you primarily for first time home buyers, they qualify more for the fixed rate, right? And then to try to get back to Johnson Financial Group. You're saying statewide, but there's a number of banks that you have throughout the state, right?
Yes. We have a large number of branches in Racine, since we're based out of Racine. Also in Kenosha. For Milwaukee, we have our downtown branch, and then our office here on National Avenue. As well as Franklin, Mequon, Waukesha, and kind of all around, the counties around here. The majority of the branches are kind of local. And we do also, lend to other states for our clients that are moving out to other states as well.
So if a person is looking to get pre-approved, because you did indicate that you work with these different loan products, that they can go to one of these branch locations, or you'd be able to assist them here, even though that they're moving to a different location.
Yes. I mean, I had clients that that live in Milwaukee, and they're moving to Madison or to another city where we have branches as well. I am happy to help them, and I will help them if that's what they want. If they prefer and choose to go to another branch that's located in the area where they're buying, we can definitely also refer them to one of the loan officers in that area.
Okay. And how long have you been a loan officer?
Oh, I've been a loan officer for 25 years.
Wow. So you've been in the industry a long time.
Yes,
Okay.
yes.
And you also have vast knowledge in other areas other than mortgage lending.
Yes, yes. When I was very young, I started as a realtor. I worked 4 years as a realtor. And then an opportunity to become a loan officer came for me, and I took it. And this is really what I enjoy doing, mortgage lending. And in between, I had a break of mortgage lending for 3 years, being an insurance agent, so selling, home insurance and auto insurance and whatnot. So I got to know a little bit more about everything that is involved in the home buying process. So I tend to, share my knowledge with my clients as well. Mm-hmm.
And how long have you been with Johnson Bank?
With Johnson, I've been here a little over 9 years.
Okay, great. And do you work, because we're talking community lending, so I'm assuming that you do work with other community-based organizations that provide home buying education,
yes,
home buying seminars, things of that nature?
Yes, of course. We do presentation with the different agencies, presentations, at the seminars, with the different agencies local ones here in Milwaukee. And those are United Community Center in the south side of Milwaukee, Axe Housing, they are currently downtown, and then Housing Resources that has, an office here in Milwaukee and also in Racine.
Okay. So how does an individual, if they are looking to get pre-approved for a mortgage, how do they go about getting in contact with you?
I have some people referred to me by realtors, by the agencies as well, people that walk into the branch, or maybe they're referred from a previous client, family friend, whatever. So, I would do as I would screen, the call or the meeting to see exactly, what is it that they're looking for. Do they want to buy a single family, a duplex, whatever, to give them information on the different, on the differences between the programs. When it's a single family, some requirements may be different for the duplex, especially more the down payment. And then I go over the different options that we offer. If we get into the income situation, we'll see, do they qualify for grants or not, what applies, to what. So, grants may have different requirements as well, typically. And the one that all the grants have is, that people qualify up to a certain income limit. They need to stay there or under to qualify, because the grants are, for low and moderate income, families. So this has been a very individual when it comes to, to the grant. So that's something that we want to talk about the client once we know what their income is, what the situation is, to determine, how do you qualify for what grants and which ones do you not qualify for.
Okay. Now, since you mentioned grants, I know that there's various types of grants, and then there's various increments of these grants. Some of them are like you said, based on household size, but then some of them are also geographical.
Yes.
So when you meet with someone, again, going through the pre-approval process, what if they don't know where they're actually going to live? How do you determine that?
Well, I would determine, income-wise, what income, do you have to determine you qualify for grants, yes or no? And then I will explain to my clients, these particular grants are only for the city of Milwaukee. Others are only for certain parts of the city of Milwaukee based on census tract, where, remember, we're assisting low and moderate income clients and families who are looking to buy. So some grants apply to low and moderate income census tracts. Okay, so I would explain those, those things to my clients so they understand. There is a web page where I would, I tell them, I either share the web page with them, or they let me know every time they're looking at a house, does this one qualify for this grant? So I will look it up and say, yes or no before they even go and look at it. So if they're interested and they want to write an offer, they already know they qualify for certain grant that has that limitation of the location of it.
Okay. And how does would a credit score,
Mm-hmm.
would that impact
Mm-hmm.
that at all? But a credit score is basically one of the components to
Mm-hmm.
determine affordability
Mm-hmm.
and not necessarily the grant, or does it?
Right. No, no. The grants, if someone qualifies, for a loan, then we're going to determine what grants do you qualify for within the limitations of the location or the income, etc. So the grants have nothing to do with credit.
Okay.
As long as someone is pre-approved, qualifies for a loan, we're gonna look and see what grants, are they able to tap into, and the grants are stackable. So
Okay.
if we offer grants from Johnson Bank, but then there is also grants through the agencies that we work, that I mentioned, UCC, Axe Housing Resources. So we can combine any grants that they would approve for the client, plus whatever that we have, again, what the clients qualify for. Every grant has different requirements.
Mm-hmm.
So if they meet requirements for two or three, the client can receive, two or three, combined
Okay.
from us and the agencies.
And then they also have to be aware that the grants are first come, first served. So sometimes they're not always available.
Mm-hmm.
So a person shouldn't necessarily rely solely,
Right.
On the grant. So they should,
Correct.
Also have that savings capacity.
Yes.
If in the event that, they're looking for that assistance.
Mm-hmm.
And I know for myself, being a real estate professional, that we can also, ask the seller to assist with closing costs, so they can ask the seller for closing cost assistance, and also get the grants as well, correct?
Right.
Yeah.
Right. So yes, definitely. There are some programs also that we have that offer a second loan
Okay.
for those buyers that maybe don't qualify for grants. They're qualified to get the loan, but they don't have the funds. So we have an option also for those clients as well. So there is different funding that can be available, whether as a loan or as a grant. But it's a way to get into your home, because it is definitely difficult to save for a down payment.
Mm-hmm.
You don't need to save 20% down payment,
Right.
as many years ago a lot of people had to do many years ago. But nowadays there is still that wrong information that you need to save 20%, and not necessarily. For first-time home buyers, our programs only require 3% down
Okay.
payment.
Wow.
For those who want to buy a duplex, require 55% down payment. So yes, it's still a little bit more, but it's a great way to get started with 3%.
Now, since you're mentioning that, what just popped in my head is, since they don't have to have the 20%, do they have to have mortgage insurance? Or is that on some programs and not others? Or
Yes. Some programs, most of the programs do require to have mortgage insurance, which is an insurance that actually protects the lender in case of a customer defaulting on a mortgage. That insurance protects the banks against the losses due to those situations. Which fortunately with Johnson Bank, we do good loans, so we don't have much of that. But there are situations where somebody loses their job, or something out of their control, where they need to do that. Suggestion is sell the home before you get into that. But look, there is options.
Right.
There is options, but the PMI, or the mortgage insurance, basically that's what it does, protects the lender, but it also allows the buyer to go with 3% down payment into the purchase of a home, as opposed to a 20% down payment.
Right.
Eventually, that part of the payment will go away. But we also have programs with no mortgage insurance, especially designed for first-time home buyers.
Okay.
There are still fixed rate loans, no mortgage insurance, which is fabulous. We have an in-house, and we also have it under the WIDA loan program.
And how does the interest rate, how does that fare with that particular product? How does that fare with other interest rates? Is it competitive, or is it a little bit higher? Or?
It may be a little bit higher, But it's still very competitive.
Okay.
Mm-hmm,
Okay,
mm-hmm.
great.
Yes, yes. And a lot of times, going with the manual underwrite, which is, one of the options, it means that someone either didn't have a credit score or has, a lower credit score. And so we're looking, for someone that didn't have any credit, we can look into alternative credit, using verification of their rent payments and maybe their phone bill or their electric bill or insurance, whatever options we dig to find out what it is that the client is paying on a monthly basis that we can use as credit references when they have no credit established. So with this program, if they had to pay, with a program like this, they had to pay a mortgage insurance premium, it will be a high one. But with this program, you're eliminating that part of the payment, which is fabulous, especially for first-time home buyers.
And once a person goes through you, they get pre-approved, you let them know what all documents they need to bring in. How long does that process take from application to get the pre-approval, and then how long does the pre-approval last?
Okay, so once we have all the documents for the application, to be able, for an underwriter to make a decision, we submit our files, and they're reviewed, fully underwritten within 48 hours, typically. With our WIDA program, it may take a little bit longer, but it's definitely also a really great program.
Okay, and then the pre-approval, how long does the pre-approval last?
The pre-approval is good for 120 days from the time that we pull the credit report.
Okay. And are there any mistakes that a customer, or that you have known, it's been like a common thing that a customer may make with regards to their mortgage? And I know for myself, like sometimes a person would get pre-approved, they go out, they write an offer on a property, we have it accepted, and they go and get their mortgage application, and then they find out that they made some changes to their credit, which now prevented them to buy the home. Have you noticed that at all, or seen any common mistakes like that?
Yes, one of the biggest things that will affect greatly on affordability would be having a high down payment. Which what I've seen happen is someone that goes and buys a car. They already were pre-approved, but now they went and bought a car. Now they have a new debt. And currently, unfortunately, cars are just very expensive, and car payments end up to be a very high payment, which can reduce that pre-approval amount. Let's say an example: you're pre-approved for $200,000, but now you purchased a car and you have a payment of $700. That's going to reduce greatly the $200,000 to a much lower amount.
Right. So your affordability is going to drop now.
It's going to drop greatly. So it depends, what the payment amount is, but it can be very, very large.
So how do you determine the debt to income ratio? Because I know that different loan products have different ratios as well.
Yes. So we determine what the qualifying income is, and then typically for majority of the programs, 45% of that income can be used for all credit payments, including the mortgage.
Okay.
So we're going to look at the credit report. Is there loans, credit card payments that need to be accounted into this 45% debt ratio? And so what if someone has debt? Whatever amount is left is what could be used for the mortgage payment. An example, let's say 45% of whatever income that was determined is $2,000, but the client has a car payment of $400. That is reducing the $2,000 to $1,600. Is their credit cards as well? So those monthly payments will be reducing. So let's say someone that had $2,000 up to, of their income, 45%. They, with no debt, they could qualify for for a payment of $2,000. But if they have debt, it's going to reduce, which is going to also reduce the purchase price that they can qualify for.
Mm-hmm. And that debt to income ratio, because one of the things that we had just, talked about was that you say that their car payment was $400, and then now they went out and bought a new car, and now their car payment is $800. That actually just reduced their
automatically reduces their, say, for someone who was pre-approved and then they acquired new debt, so that is going to reduce their pre-approval amount. So once we have a pre-approved client, we let them know, do not touch your credit. Just keep on paying down what you have. Do not inquire for more credit. Do not make any purchase of any additional credit cards or any. Don't purchase your furniture to move into the house before you close on the loan. Do not purchase a car loan. Do not co-sign for someone else's vehicle loan. Or any other type of debt, because that will change. Just because you're pre-approved doesn't mean you're pre-approved for good until you buy a house. If you make changes on your credit or even your employment, it could affect that pre-approval. So it's important, that we keep that communication and talk to us and ask us, the client asks the questions, what if I want to switch jobs? So we're going to make the questions to find out whether it is a good move to make it now, or and it's not going to affect the pre-approval. If it's going to affect it, then the client needs to know so that they make their decision, what's more important at this time, the better paying job or buying the house. So we can, give that information for them to make an informed decision.
And not only that, I mean, when just in reverse of that, say that they had a car payment that was $400 and now they have paid that car off, that just increased their affordability. I mean, sometimes you don't want to max yourself out, but it would allow a little bit more for your affordability.
Yes, definitely. So yes, reducing debt, while let's say you are pre-approved, but you're planning to pay off this car so that you have no debt and you just want the house payment, fine, we can work with that, and we'll give you the advice, the things that you need to follow to do things the right way, so that it doesn't become an issue when this goes to underwriting and for the approval. But it is definitely something that can be done, so that payment that is reducing your mortgage payment by $400, now that you're paying that off, now you can increase it, by $400 more on your mortgage payment, at the same time increasing the purchase price.
Right. And sometimes people, they don't know with regards to, interest rates, because interest rates, they do fluctuate, different times of the day. And once they have an accepted offer and they come to you for a mortgage, they can then either lock in that rate at that time, or they can, as they say, let it float to see whether or not a lower rate will happen for them.
Yes.
So is that something that you also educate the buyers on?
Yes. Well, typically what I do is I let them know that this is what today's rate is, because the rate could change on a daily basis. And most of the time, it does. Sometimes it's very comparable, the same rate within 2 days, but then the next day it changes. So we never know what the rate is going to be. Unfortunately, if I had that crystal ball, I will let them know, wait until it comes down, but we never really know. We know when that's going to happen. We do let them know, if you lock it now, it won't be any higher than that. But if it comes down, at Johnson Bank, we do offer an option to buy at the lower rate if it drops significantly where it's worth, paying the fee. That's a possibility. So yeah, there is a lot of details that when we go into with the client, the different things we offer.
Okay. And sometimes people, they may not know about the different steps and the multitude of things that goes on behind.
Exactly.
Once you have an accepted offer, now there's different steps that you would have to take, and now there's different players because you're going to have your loan originators or your processors, and you're going to have underwriting, and all of these people are coming together, and that's not to mentioning the title company and the appraiser, and there's so many people that play a part
Yes.
In this. So you want to make sure that you have that communication with the loan officer, so they'll know whether or not if there's any unique changes or if there's any difference with regards to, like, once you pull up the credit report or with their employment. So you want to make sure that everyone is still on the same page.
Yes. And just to stress, and we talked a little bit about it, but to stress, and any changes that with your employment of your credit or your savings can affect your approval. So if you're pre-approved and then you bring that accepted offer to begin the process of your loan, if between that pre-approval and closing there are changes to your employment, to your credit, to your savings, that can affect getting you to closing. So it's very, very important that before you make, as a client, you make any decisions, contact your loan officer and say, okay, is this going to affect me if I do this or if I do that? So that you're informed and make the right decision at the time.
Okay. So again, keeping that open line of communication and discussing those things with your loan officer. What's a good fit for you? Should I make a change? Should I wait? Those things that they should be, asking, those questions. Okay. And what happens if, once the buyer closes on their deal, their transaction, if they want to, say, pay their mortgage off faster, are there any downfalls or pitfalls for them to do that?
That is the greatest thing that you can do. If you're able to pay off faster, you can do it in different ways. One, pay additional to the principal. So if your payment is $1,000 and you're able to pay $1,100, do it, because that extra $100 will be going directly to principal, which is the amount of your loan. So it would be going directly to there. And if you do it consistently, every month for a period of time, sometimes that 30-year loan can become a 25-year loan. So it is the best thing that you could do to pay it off. Sometimes there is people who, for whatever reason, have some additional funds that they want to put into it at any time. Place it into the principal. Is put in $3,000, $5,000 into your loan. You're gonna see a difference. That loan could also reduce a good 3 or 4 years to your loan.
Right.
So yes, that's the best thing to do. It. There's no downfalls. It's just great benefits for the buyer.
Right. So, but what if there is a downfall? What if I shouldn't say downfall, but life happens, and if they run into any type of financial situations, are they able to get in contact with you? I mean, do you refer them to agencies that would be able to assist them if that happens?
Yes, that's possible. Yes, that they, as soon as a client knows that they will not be able to make their first, a payment for that month, that it may be more than 30 days, they should contact, their loan officer or their bank, to see, what options do they have. The banks always offer, at Johnson, we offer, options to our clients who may be in a difficult situation to make their mortgage payment. And most of the time we also send them to work with, that agency that prepared them to go in for the pre-purchase. They counsel them, they attended the seminars. They also offer like foreclosure prevention, where we can send them to figure out a plan to keep your home and make the payments, as whatever you need to do to keep your home and just continue to make your payments. Sometimes situations are, nothing lasts forever. So there's always going to be temporary situations. Again, the banks will work with you in those situations to help you continue to make your payments and keep your home.
Okay. So what piece of advice would you give to
Mhm.
someone who's looking for their first home?
It would be, let's look at your credit and see where you're at. Do you have enough credit to qualify? Is there anything that you need to work on to, increase your credit scores? Do you have you had any blemishes in your credit in the past that maybe we need to see and talk about? Maybe they're too old where they won't affect you from it. If there isn't, let's talk about it. So let's just have that conversation. Let's just meet and look at your credit, see what you're at, because credit is one of the major factors that is going to affect your approval or not getting approved. So that, and also, let's look at your employment history, your income. You may not want to buy a house until next year, maybe the end of next year or in 2 years, whatever. But it's good to just know where you're at.
Right.
And then we can give you a plan as to what you need to do between now and then to prepare yourself to be in a good credit situation and employment, stability, where maybe you had, employment with a temp agency, and then you switch to another one, and then you finally got hired. So now that you're hired, you have a permanent job where you may need to be there for a little bit longer if you've only been there for a month or two. So we can talk about those things, and every situation is going to be different. So it is good to talk to us. Don't talk to your uncle or the friend that knows everything, but talk to the professionals that are actually doing the loans, a loan officer, so that we can tell you exactly what do you need to do specifically for your situation, because everyone's situation is going to be different. So you want to see about yours, not somebody else's, because you can't compare, one thing to another, because again, every situation is different.
Right. And one thing that when you were saying that, one thing that just popped in my head, we talked a lot about, down payment and closing costs. We talked about savings, different things like that. But then when you mentioned about, talking to different people, and everybody's situation is different, sometimes I'll get a call that, someone just bought a house and they told me that they didn't have to put any money down. And, I keep saying, there's pretty much no such thing. I would say that there's no such thing as no money down,
Exactly.
because you have your home inspection, you have your homeowner's insurance, you have your application fee. So again, you should save money, and again, like not solely rely on the grant programs, but work with your financial institution, know what you qualify for. And based on your qualifications, you would let them know this is how much your down payment and closing costs, would be based on this dollar amount. And then that's when you should be, making sure that you have that savings capacity.
Exactly.
And one of the things that we didn't talk about was you mentioned to me about moving out, which is another entity in Madison that provides.
Yes, they provide grant assistance. Typically, they are for families that have a family member with a disability. So they are, situated out of Madison, but their grants are for properties purchased in the state of Wisconsin. So anywhere in Wisconsin. So they have their requirements, as well. Sometimes they have more funding than others. Some areas, have more funding as well. I know they work out of Madison. They have some great grants for the Madison area and the county, in the county around. But they have for Milwaukee and in Waukesha and other, in other areas as well. So different grants for different areas, for different, situations and different requirements. But it is sometimes they can have, really a really good amount of funds themselves. The last I checked, maybe like 3 weeks ago, they had a grant for $30,000 for anywhere in Wisconsin. So again, you have to qualify for it. They have different requirements, but it's something that we help our clients, determine and see if that's possible.
And that goes back to, communicating with the loan officer, because they do have, information, and they work with these various agencies, so they know whether or not if these grants are available, or what you would qualify for, and things of that nature. So again, if you are a first-time home buyer and you're looking for information with regards to home buying and getting pre-approved, feel free to give Maria a call here at Johnson Financial Group, and her number is...
It's 414-220-5089. It's my office number.
Okay. And then do you all have a website that they can also go to?
There's a website address. Once they contact me, I typically like to get their email address, and then I can send them my link to apply online.
Okay.
Some people may not be comfortable with that, and I'll be happy to meet with them in person. In person is probably the best way. Even if you do an online application, we could all at some point do an in-person application to go over all the information. I think it's just easier, but it's really the preference of the client.
Okay. Well, Maria, thank you so much. And as you can see, that there's a lot of information with regards to home buying, and there's various programs and products, and we talked about interest rates, we talked about debt to income ratios, but the most important thing is to get in contact with your loan officer, and to be able to share your information with them, so that they are better able and equipped to assist you in your home buying journey. So again, thank you so much. I really appreciate your time today. And again, Maria Perez-Hernandez with Johnson Financial Bank. And this is Lisa Williams with Home Buying Made Simple. Thank you.
Thank
Bye.
you.